Welcome back to the European market open. A minute to go until the start of cash equities trading. Here are your headlines. China's tech rebound fizzles, but ARC's Cathy Wood says she's bullish on the longer-term outlook for the world's second-largest economy. Angela Merkel's bloc trails the Social Democrats in polls for the first time in 15 years. A key Merkel ally tells Bloomberg the Conservative group will undershoot its election goals in next month's vote. Plus, President Biden resists mounting pressure to delay the final pull out of Afghanistan, but asks for a contingency plan instead. Good morning, everybody. Welcome to the second hour of the European market open. Let's get into the start of the European trading day, and just 15 seconds or so to go until we see these markets open up. Futures flat to positive. Positive in the case of the CAC 40 and the FTSE 100. Elsewhere, looking a little flatter. Certainly, the Xetra DAX looks fairly flat this morning. We actually had a fairly mixed session for European stocks yesterday, and the US markets managed to achieve some gains. So we wonder if we see a little bit more of that upside. But US futures also looking fairly flat. They have done over the past hour, and they continue to do so. So US futures, if they're any kind of lead, not suggesting a great deal of appetite for movement. This is the start of the European equity trading day. We've got European equity markets just out of the gates, and the IBEX limps to the upside. The FTSE 100 just looking, well, fairly flat this morning. We do have a little bit of movement in the dollar. The dollar is moving higher, and we see other currencies on the back foot, the pound, the euro, for example. No great big moves, but certainly that seems to be the direction of travel. And if that tells us anything about risk appetite, then maybe we don't anticipate great gains in European stocks this morning. Although that said, we do see some movement to the upside on the CAC 40, which is up, as I say, by 0.3%, or as I said, with the futures, that was the expectation, and there we have it, the CAC 40 moving a little bit higher. The FTSE 100 not moving all that much higher, given we have seen a bit of a rebound in some energy prices and in some of the miners, some of the mining elements, if you like. You might have thought we might see a bit of upside in that sector, but we'll keep an eye on it and bring you the latest moves there. So European equity markets opening fairly flat, entirely flat really on the Stoxx 600 this morning. Stocks really seem to be in flux today as a rebound in Chinese tech stocks fizzled out. That's as investors weigh the resilience of the economic recovery to the fast-spreading Delta virus strain. Also in focus, of course, Jackson Hole. Christopher Ailman, CIO of one of the biggest US pension funds, says he doesn't expect much news out of the Fed's gathering this week.
I think this market, it's priced to perfection. And if I look outside the window, life is not perfection. So my team just started getting a little nervous about this equity market in the last couple of weeks. Doesn't mean we're going to be underweight, but we're certainly not going to be overweight and going into the fall, and especially going into Jackson Hole on Friday.
So that's the view from CalSTRS. Joining us now is Janet Mui, Bruin Dolphin Investment Director. Janet, very good to have you with us. So as we head towards Jackson Hole, the view of CalSTRS, then they're a little bit nervous about what they see in these equity markets. They see them as priced to perfection. Do you have that same assessment of pricing, of valuation, and does that make you nervous?
Hi, good morning, and thanks for having me. So we are overall overweight on our equity position. We have been overweight on equities for a long period of time. And the key reason is because of there is no alternative narrative. Basically, we're seeing yields being very low. And mind you, we have this QE tapering discussion, and the Fed minutes showing that they are going to do it probably later this year. And still, US bond yields really barely moved. So we think that this cycle, the bond yield is going to be lower than the previous cycle. So we think that in this low yield, low interest rate environment, investors will continue to prefer equities. So that's really the key argument there. And we are at the stage of an ongoing economic cycle. So despite we're seeing some deceleration in the recent economic data, it doesn't change the fact that we are still in recovery and we're going to see growth. So in this environment, again, equities should be the preferred choice.
Okay, so low interest rate environment means there is no alternative. Tina to the fore, Janet, and that's one of the arguments for getting into equities as far as you see it. Is one of the threats to that view then that we do see higher treasury yields? And what do you think could drive those treasury yields higher from here? We've seen a little bit of upside over recent days, but we're still just at 1.28% on the US 10-year yield. I was looking at some views from PGIM, who were saying that they don't think that we're going to see higher yields on the back of the taper because the yields have not gone higher on the back of talk of tapering. So if the taper doesn't drive yields higher, what could?
Yes, if you look at the developments in the first half of the year, yields have gone significantly higher in a fast pace, and that's primarily because of the economic expectation of very strong growth. So this year, we're going to see US and UK growth at 7%, and we are not going to see that next year. So it seems that the peak growth is already being experienced already, and we are talking about peak growth, peak inflation, and peak stimulus. So we doubt that we are going to see yields as high as where we have been in the first half of the year. That's 175. And what we think is that there is upside for yields, given that we are likely to see ongoing economic recovery, labor going back into the job market after the extra unemployment benefit ends, and just ongoing normalization of the economy. So that, I think, is the driver for the high yields there. But given that our view is that very strong growth has already been passed, and we are going to see a transition to slower growth from here, we doubt that the yields will have a very strong upside from here. And also, people have been saying that QE tapering would push yields higher. But actually, if you look at the stimulus situation, we are likely to see peak stimulus as well this year. And going forward, there will be less supply of treasuries in the market. So the Fed is buying less bonds, but also there's also less supply of
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Chevys, Caddies, gone electric? What's GM's next move? CEO Mary Barra joins David Weston for an exclusive interview Thursday on Balance of Power, live from Detroit. And the conversation continues Friday on Wall Street Week. Coverage begins Thursday at noon on Bloomberg Television and Radio.
Welcome back to the European Market Open. 23 minutes into our session, and the Central DAX fairly flat. Elsewhere, very slight gains for European equity markets. Now to Germany, where the Bavarian Premier Markus Söder, who leads a key faction in Chancellor Angela Merkel's conservative bloc, has conceded that his alliance, or the alliance, sorry, may fail to hit a goal of comfortably winning next month's election. This comes as the poll puts the Social Democrats, or the polling puts Social Democrats in the lead for the first time. Joining us now, Bloomberg's Maria Tadeo, who's in Berlin. Get us up to speed then, Maria. How is the election race shaping up?
Yes, Anna, and yesterday we spoke with the head of the CSU, that is a sister party to the CDU in Bavaria. Markus Söder conceded that the polling numbers perhaps are not the most optimistic for the Christian Democrats. He also conceded that so far the election is not going well for the CDU and admitted that from now on it will be very tight until election day. Having said that, he expressed that Armin Laschet is still very much the man that should lead the country forward. There was no criticism of Laschet. Remember, at one point, they were both competing for the same job, and he believes that as we get close to polling day, the CDU will gain traction in those polls. That hasn't actually manifested, but that is what he's betting on. Let's take a look.
I would say that we're tied at halftime. We were out in front and then had a few small mistakes, and then the others picked up. And now we have to pay attention that this will be a head-to-head race, and that this head-to-head competition will continue right up until the last day of the campaign. And then it will decide what sort of coalitions are possible.
And that is Markus Söder, the head of the CSU in Bavaria. Now, he does talk about a few small missteps, but we know that that's perhaps an understatement, that the missteps that we've seen from Armin Laschet really have taken a huge toll on his campaign, on his individual polling numbers, and he's not been able to recover from them for weeks. So the trend overall for the CDU is actually not looking good.
Maria, what are the main issues then for voters that the CDU and CSU need to be aware of?
Well, Anna, to blame this just on Armin Laschet is also perhaps not the most accurate assessment, because a lot of this does come to the party politics and the program. For many Germans would tell you that the CDU so far, when it comes to modernizing the economy, when it comes to kind of going greener and showing that credentials, that have not been up to speed. And, Markus Söder again also conceded that, but he said from now on we will debate on the substance and things will become much more clear for voters going forward. Let's take a look.
The election campaign has been occupied the whole time with trivial matters. A laugh here, a comment there. What is also, in part, very unfair for the public perception. And now it is the case that, in the last few weeks, it's gotten worse. But I'm sure the polls will increase again. And even if it isn't going to be some giant leap forward, I believe we can still manage to remain number one.
Anna, that was Markus Söder, head of the CSU, speaking to us yesterday.
Yeah, thanks for bringing us up to speed with the latest on the German elections then, Maria Tadeo in Berlin. Coming up, we'll get the latest on the G7 and Afghanistan. We'll also talk about mining in Afghanistan. That conversation next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open, half an hour into Wednesday's trading session, and we're flat to positive across European equity markets. Let's have a look at the sector breakdown. We can see travel and leisure once again to the upside. Overall, not making a great deal of movement, of progress across these European equity markets. The handover from Asia was flat to positive, sort of pausing in that tech rebound story that we've been covering over the last couple of days through Asia. Travel and leisure, the second day that this time of the day, we're seeing travel and leisure to the upside by the most. That is the best gaining sector. We do have a review of the UK's travel rules coming through. It happens every 3 weeks, and the latest review takes place today. So we will look for any further news on places that are becoming easier or more difficult to visit from a UK perspective. So that's one thing to look out for on that front. That is the markets then. Autos and auto parts to the downside. Let's get a Bloomberg First Word News update. The biggest stories we're covering here today at Bloomberg. Here's Laura.
Thanks, Anna. The U.S. House has adopted a $3.5 trillion budget resolution. Assurances from Speaker Nancy Pelosi helped unite fractious Democrats to move ahead on the core of President Joe Biden's economic agenda. The action tees up a final vote on the separate $550 billion infrastructure bill next month. A new report from the U.S. CDC says vaccine efficacy among frontline workers dropped from 91% to 66% after the Delta variant became dominant. But the researchers say the findings should be interpreted with caution as vaccine effectiveness likely wanes over time, backing up the findings of a recent UK study. Rolling Stones drummer Charlie Watts has died aged 80. The musician, known for defining his drumming style as subtle but with a swing and solid groove, had been a member of the iconic rock group since 1963. Earlier this month, it was announced that Watts would miss the band's forthcoming US tour. A statement from his publicist says he died in a London hospital surrounded by family. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura writes here in London. Now, following the G7 summit, President Biden has resisted mounting pressure to keep the US in Afghanistan past his self-imposed deadline. But he has ordered his national security team to come up with a contingency plan if a delay is needed.
We are currently on a pace to finish by August the 31st. The sooner we can finish, the better. Each day of operations brings added risk to our troops. But the completion by August 31st depends upon the Taliban continuing to cooperate and allow access to the airport for those who we're transporting out, and no disruptions to our operations.
But after their virtual meeting, G7 leaders raised concerns about the president's decision.
We all agreed that it is our moral duty to help the Afghan people and to provide as much as possible support as conditions allow.
We remain committed to those values and we remain committed to Afghanistan.
Let's be clear. Let's not allow the creation of a new market for smugglers and human traffickers. And we are determined to keep the migratory flows under control and the EU's borders protected.
The number one condition that we're insisting upon is safe passage beyond the 31st.
European leaders there talking about Afghanistan. The short-term focus, of course, remains on evacuation from Kabul airport and the human rights elements here. But there is room to talk about the future of the Afghanistan economy, and let's do that now. The country hosts one of the world's largest supplies of lithium, a mineral that plays a crucial role in the electric vehicle revolution. US officials estimate that Afghanistan has $1 trillion of unexplored deposits. The Afghan government says they're worth 3 times as much.
Because of the geology of Afghanistan, some of these deposits are remarkably accessible. especially the rare earth elements.
Afghanistan is not going to be a very pleasant environment to be in. It's going to be very corrupt.
But that's just the geological point of this. Afghanistan is very underdeveloped, not only because of with respect to mining, but also, as you mentioned, the infrastructure.
So you have these vast resources sitting there. So it's going to turn into a curse more than a blessing for countries like Afghanistan, where you have enormous amounts of corruption going to happen in the future.
A focus there on the mineral wealth of the country. Well, joining us now is our chief Asia economics correspondent, Enda Curran, who's been looking in detail at the Afghan economy. Enda, good morning. So what kind of Afghan economy is likely to emerge then after the Taliban take over?
Well, Anna, we know that all reports are right now the economy is in free fall, the ATMs are running out of cash, the pharmacies are running out of drugs, prices for core staple foods are going through the roof. We've had warnings from the former central bank governor in terms of inflation and capital outflows and what might happen to currency. And of course, we now know the IMF, the World Bank have cut off funding and the New York Fed have frozen Afghanistan's reserves. So it's in a spiral now. For that to stop and for the economy to develop at all from here will all hinge on what kind of political system does come out of Kabul. And we spoke to a lot of people this week and we asked what they see. And the common denominator among all of them is that whatever government takes over will have to adhere to international human rights standards. In particular, they'll have to adhere to women's rights and, of course, build on the work that was done on female literacy over the years there. So there is an economy side to this story. People are asking what kind of an economy will emerge out of it. But all of those answers go back to what kind of a Taliban will take over and how they will run the government from here.
Yes, and it'll be really interesting to see which major powers position to try to capitalize on opportunities in Afghanistan. What are the economic attractions for China, for example, in Afghanistan? I see just now the foreign ministry briefing in China saying that China and the Afghan Taliban have effective communication. Now, we know the Taliban are in communication with all kinds of parties all around this most recent conflict and this situation. But in terms of China's interest in Afghanistan, what does it amount to?
Yeah, well, Anna, there's obviously a security dimension for China and Afghanistan, but there's certainly an economic one too. And it's like you mentioned at the beginning, there is at least $1 trillion worth of mineral deposits in Afghanistan, including the world's biggest holdings of lithium reserves, along with copper and coal and others, rare earths, for example. So the thinking is that Chinese companies could get in there and perhaps build some partnerships to exploit that. We had over the weekend an opinion piece in the New York Times by a former PLA senior colonel who explicitly made a link between China developing those resources in Afghanistan. We've had some commentary in the state media making similar points. Remember, by the way, the world economy is very different today than it was when the Taliban last ruled Afghanistan. The world economy today is all about smartphones and electric vehicles, and that's why there is a premium now getting lithium, and that's why there is a focus on what will happen to these resources. But as I say, it all goes back to what kind of administration does come out of Kabul and what kind of respect and adherence there will be towards human rights in Afghanistan.
Okay, we'll look to see what interest then China expresses. Enda, thank you very much. Enda Curran, thanks very much for joining us. And sticking with Afghanistan's economy and specifically around the mining resources there, joining us now is Guillaume Pitron, journalist and author of The Rare Metals War, somebody who has focused very much on the essentials of the Green Revolution, where they can be found and how that changes geopolitics. Guillaume, thanks very much for joining us. So how much of these essential green metals, if you like, cobalt, gold, lithium and the like, how much of those can be found in Afghanistan?
Well, the United States Geological Survey, in 2010 already made mention of this, of the presence of this resource in the Earth's crust. The thing is, there is a wealth of this resource, and I have no doubt to believe that actually they're going to be available. The thing is, can this potential be extracted actually? And this is a big question because you need stability, political stability, you need economic stability, you need infrastructure, you need human resource. And the question is there a possibility to actually make this potential a real wealth for the future? And nobody knows that yet.
Right, indeed. I think the person who was trying to get hold of you, Guillaume, probably to tell you that you're on TV, has given up. So we'll carry on with our conversation. So clearly anybody who's interested in these assets, back to the serious business, anyone who's interested in these assets, they have to make an assessment about a high level of political uncertainty, to say the least. Is that one of the things that will hold back exploration, I suppose, of these assets?
I really think so. It will hold back exploration and it will hold back exploitation. The Chinese would love actually to tap into these resources in the future because they don't have much lithium, or now the Chinese need lithium for their own battery market. The Chinese have rare earth elements, but they don't want to tap into their own resource. They'd like to exploit someone else's resources so that they don't have to pay the price of the pollution due to the extraction. So they have an interest in actually exploiting these resources outside of the borders, and Afghanistan has a border with China. China is already tapping into the rare earths of Burma, and Burma has become a world producer of these rare earths, which actually end up on the Chinese market. So the Chinese could have an interest in actually doing the same with the Afghanistan rare earths. Now the question is, today there is a very tiny rare earths market in Afghanistan due to the reasons that I've explained before. Will the Chinese be able to go beyond just illegal rare earths mining and illegal lithium mining? Will they be able to come to an industrial level and make these resources actually really available for the batteries? And that's going to be very hard to figure that out before a couple of years, when the Chinese can actually really settle in Afghanistan and develop their own interests.
So it'll be interesting to watch any conversations that take place then between China and Afghanistan. If we're moving from a world then, Guillaume, where we used to talk about petrodollars and now we'll maybe talk about metal dollars, or whatever the new world is for that, how much should we be ready for that to reshape the geopolitics of the 21st century?
This is an interesting question. We have to understand that moving from oil to these green minerals means another geopolitics. We have the geopolitics of oil in the 20th century. It's still going on, and now we are moving towards new resources. And there is a geopolitics of green energy, of the electric transition. And now we question whether we should actually get lithium from the Taliban and from the Chinese. We have to just wait a minute, we have to think about that. In the 20th century, we funded the Saudis and they spread their radical Islam around the world in exchange for our petrodollars. And now we're wondering if we're going to tap into the Taliban's resources, and what will they do with the money? Will they spread their own radical Islam around the world? So I think, this technological progress that we call the energy transition should come along with a human progress, with an ethical progress. Are we really ready to actually fund our energy transition with lithium in exchange for huge geopolitical stakes, which are going to loom in the future? I think we just shouldn't touch these deposits. There is lots of lithium everywhere around in the world. Lots of lithium is being discovered in Europe. I think we'd better actually tap into our own resources before trying to fund the Talibans.
Right. I mean, there are a lot of questions about how the Taliban will shape the Afghan economy, how it plans to run the economy. Do we get any sense, Guillaume, about how much appetite they have to exploit these natural resources, and how much interest they would have in foreign money and allowing foreign money in to do that?
They have a lot of interest in tapping into these resources. We already know that mining activities account for a good bunch of the Taliban's fundings, has been accounting for a good bunch of the Taliban's funding for the last years. It is said that mining accounts for the second rank in terms of Taliban's funding. So the Talibans say they don't want to exploit drugs market anymore, which I can doubt about that, but basically this is what they say. So if they do, they will have to replace these types of fundings by other types of funding. So they really have the willingness to do so. once again, will they be able to, aside from just illegal and black market and artisanal mining, if they want to really get rich out of these resources, they'll have to develop this infrastructure network, which Afghanistan doesn't have for mining. They will have to assure political stability, economic stability. The Chinese will have to come and be trustful about the fact that they will have their money back within 20 years after they have invested billions of dollars into the Afghanistan mining industry. And this is what's really unsure as we speak now.
Okay, Guillaume, thanks very much for bringing us the story. Guillaume Pitron, journalist and author of The Rare Metals War. Coming up on this program, we'll be thinking about the return to office. Many of you, I know, still working from home. Goldman Sachs led the way on returning to the office and that narrative, but now says it will require all employees to don masks and prove that they have been vaccinated if they want to come back to the office. More on that next. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
What would be the skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Welcome back to the European Market Open. 47 minutes into our European session, and European equity markets flat to positive. We're fairly flat on the Xetra DAX, a bit more of a gain to speak of in other markets. In terms of US futures, we're pretty flat there. I can just tell you that NASDAQ futures up by 0.1% elsewhere, flat on Dow and E-minis. Now, 2 months after Goldman Sachs led Wall Street's return to the office, it's taking pages from the pandemic playbooks of more cautious rivals. The bank will now require employees to wear face masks even when they have been vaccinated, and also prove their vaccination status. Let us bring into the conversation Bloomberg's Tom Metcalf, who can tell us more about this and joins me on set. Tom, very good morning to you. So give us the latest specifics then around Goldman. What is it that they're asking their staff to do?
So, and this is largely for their US office, because the London office has always been doing this, but the US office was a bit further ahead and had kind of rescinded the need for masks, rescinded, sort of basically business as usual. But from today, the folk will be wearing masks again in the lobbies, basically any common areas. And even in some offices, I think Washington, San Francisco, they'll be required to sort of wear their masks even at their desks. And then the second element is the vaccination. Basically, from September the 7th, if you're not vaccinated, you're not going to be allowed back into the Goldman office. So effectively a mandate. for employees to get jabbed.
Okay, and that's really interesting in the context of banking. Also in the wider context, a lot of people thinking about what we've heard from full approval from the FDA, and will that mean that more businesses feel comfortable putting in place vaccination mandates? So that's something interesting to watch. So how does this compare then to other banks, other businesses in the sector?
Well, like I say, Goldman have always been sort of the furthest forward, pushing for like a return to normality. So it's interesting they're coming kind of back to the pack. And I think really when you look at the other banks, they have been a lot more cautious. So Morgan Stanley, for example, hasn't set a date yet for its staff, to formally come back, whereas Goldman said, hey, mid-June. So, I think that's a sign that perhaps hopes that post-Labor Day or post the summer vacation, things would return to normal. On Wall Street, one of the more aggressive industries bringing people back are basically dead in the water. And I think it's still really up in the air what the future of work will look like.
Right, absolutely up in the air. How is this, this is a big conversation about just returning to the office, but it's also about work culture, isn't it? And causes many of us to think quite a lot about how office culture is changing. It's really interesting for international businesses as well, having to manage people in very different locations, and maybe the culture was different before this, and the virus is having a different impact in some of those geographies. But what's your assessment of how office culture then is changing?
Well, basically, like you said, it's like an impossible task for the leadership trying to work out, hey, how do we apply these policies? Because if you go around the world, it's going to be different. So in Hong Kong, we're seeing data that suggests offices are pretty much back to pre-pandemic norms. Obviously, in London, that's maybe at 50%, and New York's even below London now after the Delta variant kind of took hold out there, down to 40. So you have these decisions trying to, apply to a big global company, and it's basically an impossible task.
Tom, thanks very much. Tom Metcalf joining us there to talk about the banking sector, giving us the latest on Goldman Sachs. We'll dive back into the market action next. This is Bloomberg.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. 53 minutes into our trading session, European equity markets flat to positive can I sense a little more positivity creeping in there? Let's get to the Markets Live team. Noor Al-Ali joins us from the Bloomberg M Live team to take us through the market action. Noor, good to speak to you. I was going to ask you about the major themes in markets today, but we're not seeing major moves, so I wonder if that's appropriate. What do you see as the drivers?
Well, honestly, I mean, as you said, we're not really seeing much of a move today. But really, if we look at the general market trend here, we could probably try to see what it's trying to tell us. The one thing that's really interesting to me and that's standing out is crude actually holding on to the gains that we've seen in the last 2 days. And maybe we'll get into that a little bit later. But also, you had Chinese tech stocks reversing the gains that they've had, at least. I mean, you had the Hang Seng Index, rise as much as 3.5% and then reverse all that and take that back. And of course, we're all waiting for the FOMC, and that's the big ticket this week.
Yes, let me dive into that commodity story then, and whether we do see oil prices holding on to the recent gains. We crept over $70 on Brent, 70.93 is where we trade, and we're fairly flat in this morning's session here in London. Do you see us holding on to these levels then, Noor?
You know, I'm in the camp that I'm just not entirely convinced by this rally, but what I'll tell you is, particularly with WTI, waiting for the EIA report later today might give us a clear indication of where WTI is going to go in later. And obviously, that's the benchmark that's relevant for U.S. oil. Crude inventories are very relevant. If they're depleting, if we see less inventory, that means supply constraints, and that means perhaps a boost for oil in the next couple of weeks at least, up until OPEC when they come in September 1st, which is really the interesting thing that's going to come there.
Yeah, and the Fed and FOMC expectations clearly very much to the fore this week. It is a quiet week, Noor, but we're heading towards Jackson Hole, so you do get a sense that things might not stay quiet for all that long. What's the latest narrative that you're hearing around the Fed?
To be honest, it's really difficult. I will tell you that, though, I think the doves may have it. We might see a bit of a dovish taper. I've been seeing a little bit more of that mentioned there. There might be some mention of tapering, which will give us a clear incentive here to see where the markets go. Obviously, we've had Mark Cudmore come in later and talk to you about real negative rates, dipping to the lowest level of times where, I wasn't even old enough to remember that time yet. And so inflation expectations and concerns are there, and it's really concerning. And that's definitely weighing on the Fed coming up. The one thing, though, to keep in mind, though, that the Fed has distinctly tried to separate the tapering conversation from the rates conversation. And we might see that distinction a bit more there.
Yeah, the negative real yield chart you referenced there, that conversation we had with Mark Cudmore earlier on in the program in the first hour, really interesting to see how quickly we slipped into that negative interest rate environment with such, in terms of real yields, with slipped into negative real yields with such low treasury yields and such high inflation. Key questions around how long that inflation pulse lasts for. Noor, thanks very much for joining us. Noor Al-Ali from the Markets Live team. Thanks for spending time with us here on the European Market Open. And that is it for the European Market Open. Surveillance early edition is up next. Tracking these markets as we see slight gains across European equity markets, making modest gains to the upside. The Xetra DAX fairly flat, has been for a lot of this morning, but elsewhere we are seeing a little bit of upside. US futures, though, fairly flat this morning, certainly flat on E-minis and Dow futures. NASDAQ futures up by 0.1%. This is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Truth be told, the Europeans are completely helpless regarding the developments in Afghanistan. The Americans decided, hastily in my opinion, to leave the country.
We want them to evacuate all foreign nationals by the 31st of August. And we are not in favor of allowing Afghans to leave.
We are currently on a pace to finish by August the 31st. The sooner we can finish, the better.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Bloomberg Surveillance Early Edition on this Wednesday, the 25th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Goldman Sachs is imposing a mask mandate on U.S. employees from today. Staff that haven't had the vaccine by September 7th will have to work from home. Wall Street reaches out to Beijing to revive talks to open its financial system. ARC's Cathie Wood says she's bullish on the longer-term outlook for the world's second-largest economy. And Angela Merkel's bloc trails the Social Democrats in polls for the first time in 15 years. A key Merkel ally tells Bloomberg the conservative group will undershoot its election goal in next month's vote. So let's go straight to the markets and stocks. Actually taking a little bit of a breather this morning after U.S. indices hit new fresh record highs overnight. Now, amid low volumes, the S&P 500 actually continued a four-day winning streak as recovery optimism won over the Delta variant concerns. Christopher Ailman, the chief investment officer of California State Teachers Retirement System, one of the biggest U.S. pension funds, told us why he's worried about current valuations.
I think this market, it's priced to perfection. And if I look outside the window, life is not perfection. So my team just started getting a little nervous about this equity market in the last couple of weeks. Doesn't mean we're going to be underweight, but we're certainly not going to be overweight until going into the fall, and especially going into Jackson Hole on Friday.
Let's now get to the markets with Ritika Gupta. Ritika, are we going to see another day of gains?
Right, Francine. Well, it looks like there's pretty muted reaction today. If you look over here in Europe, the stock 600 just marginally positive, and also a similar picture if you look at the States and look at S&P futures, flat, directionless. This, of course, after we've had 2 days of gains sitting around record highs. Perhaps markets don't think the Fed is going to remove any of that punch bowl ahead of Jackson Hole. And as to where the S&P is going, we've been talking about just a wide range of forecasts between strategists, some 1,000 points divergence from the top and the bottom range of that forecast. Where else we've had some action yesterday was in that yield space, the 10-year yield drifting higher yesterday ahead of Jackson Hole, but today just kind of muted action again, sitting at about 1.29%. Flip up the board though, I want to talk about Jackson Hole. That is the key event. And markets trying to gauge any sense of a timeline on the tapering, though if you speak to most traders, they're not really expecting much tomorrow, perhaps thinking we'll get a bit more insight in September. Where we might get a bit more guidance, though, is in the Fed's outlook on inflation. If you remember last year at the symposium, they said that they would allow inflation to run above that 2% target. But if you look at the PCE, this is the Fed's preferred gauge, as we know, these are these white bars, we sit well above that at 3.5%. Meanwhile, if you look at the Fed's other goal of low unemployment, we are trending towards that goal. So markets really want to know if the Fed's going to have any flexibility around its policy on inflation if it does indeed prove to be persistent, Francine.
Ritika, thank you so much. Ritika Gupta there with some of the markets that we're looking at. Now, this new record in U.S. stocks comes as the House adopts Joe Biden's $3.5 trillion budget blueprint, which was largely expected from investors to pass. Attention now turns to the Central Bank Symposium of Jackson Hole. So for more on all of this, we're joined by Aaron Captain, Global Head of Economic Research at UBS. Aaron, as always, thank you so much for joining us. What exactly are you expecting in Jackson Hole?
It's, as you said, I think it's a bit too early for advance warning on the taper. So the minutes, I think, made that clear from the last FOMC meeting. So what we think he's going to talk about, and it would be helpful if they released the agenda a bit earlier, because obviously we don't know yet. So,
it would.
But so what we think he's going to talk about is the separation between the taper decision, the balance sheet, and rate lift off. And obviously, the whole strategy to make this tantrum-less is basically to talk about it until you're blue in the face, make it very clear that once you start tapering, it doesn't immediately lead to rate hikes. And so that's a theme that's been present in the last couple of FOMC meetings, and various participants have been talking about it, and so we think he'll expand on that. So it'll be an opportunity to talk about where the economy is exactly in terms of the material progress, talk about inflation, talk about the labor market, but stay away from the advanced warning signal, which we think probably comes in September.
Aaron, where do you see inflation? So when you look at what exactly is priced in terms of economic prospects and the kind of inflation that you're expecting in the next 6 months, what should we be watching out for?
Yeah, so we think we're now at the peak, and we're in the transitory camp. So we think core PCE is going to come crashing down by the time you get to the end of next year. We're actually at about 1.5, 1.6 on core PCE. So we're way below the Fed forecast. And that's partly because we're a bit above the Fed for this year. So, and we think, you know, there's a little bit for everyone in the last inflation print. So I think the factors that we're pushing up very strongly, like used cars, are clearly now coming down. And we think those prices are going negative the next couple of months. So by the time you get to the end of the year, we think we're going to be running, you know, monthly prints of about 10 basis points. So way below where we've come from, but we're not quite there yet. So I think in the last sprint, you know, we're still annualizing at 4%, even though it was half of the pace of the previous 3 months. So I think we're sort of in this, still in sort of the phase where both sides can argue it either way. Now we think there's sort of enough evidence that inflation really starts to moderate from here, but you don't really start to see that until probably after they have to give the advance warning signal. So I think that advance warning signal on the taper that we think comes September is largely dependent at this stage on getting another sort of close to 1 million payroll print next week. Then they give the advance warning, and then you wait until you get to probably November to sort of give the sort of firm signal on, okay, we're ready to pull the trigger here.
Aaron, I don't know how much the market, or actually how much economists are actually looking at who would come, you know, instead of Jay Powell. So we understand that Janet Yellen has also given her blessing to people, you know, in her circle that Jay Powell should stay on. We're expecting President Biden to make a decision on that in September, but he's seen as possibly one of the most dovish central bankers that the Fed has had for quite some time. You know, if he doesn't stay on, what happens?
So I think the alternatives that haven't mentioned, people like Lil Brainard, I don't think would be materially more hawkish. So I really, in terms of the sort of the cohort of people you could choose an alternative candidate from, I think they're all going to be very similar. And I think that's partly because Yellen is a Treasury Secretary, and partly this is a continuance of her policy. And so I think the people who are involved in making these decisions are all quite like-minded, and I think they're quite happy with the Fed policy. So I'd be very surprised if we get a candidate that would be a significant deviation from from Powell. But you've seen the same stories as me, which is that actually his chances of staying on are pretty decent. So we'll see.
Aaron, are we importing, inflation from China at all, or given the regulation that we've seen in China, is that a thing of the past?
Well, so commodity prices are obviously a big feature of this year's inflation pressure. Now, a large part of that's oil, and that's really not China in my mind. So, where China pushes up commodity prices is in metals, and there we're now clearly seeing sort of the pressure come off. We're seeing a rotation in Chinese growth away from infrastructure investment. The last data print was annualizing at minus 10%. So, as we go from sort of public stimulus focused on infrastructure and property market to more consumption-led growth in China, you get less commodity intensity in import demand, and so that takes a little bit of pressure off commodity prices, and all that helps on a headline. But so that matters, but it doesn't really matter that much to the central banks, because I think these commodity price pressures are always very well understood. And so I just don't think that's where the uncertainty is right now. So I think China, having this weak data set that we saw last month, that matters just because Chinese growth matters to the rest of the world, and it matters to EM, and it matters to aggregate momentum. But in terms of the inflation dynamics, it's really much more about, I think, the opening up dynamics and the supply bottlenecks. And there, it's really not so much China, I think, that is sort of causing those bottlenecks. So I think that's where the real uncertainty is. How long do those chip shortages and container shortages last? And that's, I think, what the central banks are focused on.
All right, Aaron, thanks so much. Aaron Captain, the Global Head of Economic Research at UBS, joining us this morning. And you can catch all of our special coverage of the Jackson Hole meeting right here on Bloomberg TV. That's on Friday at 3 p.m. UK time. Coming up, we'll have plenty more, of course, on economics. So we'll also speak to the IFO president, Clement Fuest, after the Institute's latest readings on the German business climate missed estimates. And as Cathie Wood tells Bloomberg, she's optimistic about the prospects for Chinese stocks. Wall Street also reaches out to revive talks with Beijing to open up its financial system. We'll have plenty more on that shortly. This is Bloomberg.
Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Acqua here in London. Now let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. House has adopted a $3.5 trillion budget resolution. Assurances from Speaker Nancy Pelosi helped unite fractious Democrats to move ahead on the core of President Joe Biden's economic agenda. The action tees up a final vote on the separate $550 billion infrastructure bill next month. Now, China has made a first arrest in a sexual assault case involving a former Alibaba manager. Prosecutors in the northern city of Jinan say a man has been detained on suspicion of forcible indecency. The case triggered a fierce debate about sexism in China's tech industry and what many in the country say is an overdue examination of the way women are treated in the workplace. And a new report from the US CDC says vaccine efficacy among frontline workers dropped from 91% to 66% after the Delta variant became dominant. But the researchers say the findings should be interpreted with caution as vaccine effectiveness likely wanes over time, backing up the findings of a recent study here in the UK. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, Germany's election race tightens with a new poll putting the Social Democrats ahead of Chancellor Merkel's ruling coalition. We'll get the latest from Berlin. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Jackson Hole Economic Symposium is going virtual. Bloomberg will bring you the latest with key discussions between central bankers and financial leaders, plus an extended edition of Bloomberg Surveillance Friday from 6 to 10. Coverage begins Thursday on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Aqua here in London. Now to Germany, where the Bavarian Premier Markus Söder, who heads a key faction in Chancellor Angela Merkel's conservative bloc, has conceded that the alliance may actually fail to hit a goal of comfortably winning next month's election. Now this comes as a poll by Forsa puts the Social Democrats in the lead for the first time in that survey. Well, Bloomberg's Maria Tadeo joins us from Berlin. Maria, I mean, first of all, the poll is actually quite extraordinary because it's the first time this happens ever, I think, since 2006. How is the election actually shaping up?
Yes, Francine, and when you look at the poll that came out yesterday, it's very much being presented in Germany as a shock poll. To see the SPD now officially overtaking the CDU, it also highlights the many challenges that the Christian Democrats, the CDU and the CSU will have to deal with going into the election, and once again certifies this loss in momentum that we've seen for weeks. And yesterday, when we spoke with the CSU head, Markus Söder, he conceded that. He said that this is becoming a much tighter race than initially expected. Let's take a look.
I would say that we're tied at halftime. We were out in front and then had a few small mistakes, and then the others picked up. And now we have to pay attention that this will be a head-to-head race, and that this head-to-head competition will continue right up until the last day of the campaign. And then it will decide what sort of coalitions are possible.
And that is Markus Söder, the head of the CSU. And it's interesting, though, that he is speaking of missteps in the campaign. That is perhaps an understatement. You know, there has been big flaws in the campaign of Armin Laschet so far. What's also key from that webinar that he did with Bloomberg yesterday, Francine, is that he still says he believes Armin Laschet is the best person for the job. Remember, the two of them are actually competing at one point for the nomination to lead the CDU.
So, Maria, what are the main issues actually here for CDU, CSU, and for the voters? Why are they not doing as well as maybe we thought a couple of months ago?
Yes, and you know, Francine, it would be very easy to some extent to blame this all on Armin Laschet. Yes, we know he's had a number of problems. Yes, we know that he's not been able to recover from the management of the floods, but it's not just about him. There's also real questions about the substance of the CDU taking Germany forward on climate, but also the digital economy. And Markus Söder conceded that too. He said that from now on they'll have to focus on substance more to show voters they can do it. Let's take a look.
The election campaign has been occupied the whole time with trivial matters, a laugh here, a comment there. What is also, in part, very unfair for the public perception. And now it is the case that, in the last few weeks, it's gotten worse. But I'm sure the polls will increase again. And even if it isn't going to be some giant leap forward, I believe we can still manage to remain number one.
Well, that was, of course, Maria Tadeo in Berlin there, and we'll have plenty more on the German election just about, I think, 28 or 29 days away. Now, in the last half hour, we've also had some IFO survey figures out of Germany. Business confidence actually came in slightly lower than expected, falling from last month. Now, we're joined by Clement Fuest. He's president of the IFO Institute. Mr. Fuest, thank you for joining us. As always, what's your main concern and what is concerning Germans right now? Is it the economy or the pandemic?
Well, I would say it's two factors here that are concerning companies. One is the supply bottlenecks, shortages in intermediate products. It's not just semiconductors, it's metal products, it's plastic products, paper even. And then it's certainly the pandemic. We see rising infection numbers, and we see that in the sectors most threatened by that development, tourism, hospitality, restaurants. Expectations for the next 6 months are declining. So it's really these two factors that are weighing on the German economy at the moment.
I mean, how much of the growth outlook will have to be revised downwards as flagged by the Bundesbank?
Well, it is quite clear that the growth outlook will have to be revised downwards. It's difficult to say by how much at this stage. So a lot will depend on how the supply bottlenecks develop. What we see in this month is that in manufacturing, things are actually getting worse rather than better, because 70% of all companies are now telling us they have problems with the supply of intermediate goods. In the last month, this was significantly lower, around 60. So this is not becoming better. And if that continues, continues, it will be a significant downgrade of the growth outlook. A lot will also depend on the pandemic and on how the vaccination campaign continues. If more people are vaccinated, we can live with higher infection numbers. And the increase will be dampened. But if vaccinations continue to slow, I think we really have a problem.
I mean, as we ramp up also our coverage, Mr. Fuest, of the German election, how do you see it panning out? I mean, if you look at the various factions and as outsiders are trying to understand exactly what German voters will focus on, what do you think the main focus will be in the next 26 days?
The focus will certainly be on this very tight race between the Social Democrats and the Conservatives, and the focus will be on the two candidates very much. The third party, the Greens, are a lot weaker now because their candidate hasn't fared well, but it will be really a focus on these two persons. And currently, the Scholz, the Social Democrat, is a lot more popular, so the Conservatives will have a hard time turning that around. And that, of course, increases uncertainty about the outcome of the elections.
So as voters go to the polls, what do you think they'll be thinking about? How much of it, again, will be supply chains? How much will be, climate change sustainability, or actually what's happening in Afghanistan? I'm asking because you have a great barometer of actually the way Germany functions and what voters and consumers are feeling.
I think voters are concerned about these general major challenges: climate change. How do we preserve the current incomes, current jobs in Germany in the face of policies to address climate change? How do we deal with growing international competition difficulties in the car industry? And they will vote for the party and the candidate they deem able to address these issues. So they are looking for someone who is competent and convincing to address these challenges. And whoever is better at convincing the voters will win these elections.
Mr. Fuest, thank you so much for joining us. Clemens Fuest, there, president of the IFO Institute. Now, coming up, we'll talk a lot more about banks and, of course, mandates on vaccinations. Goldman Sachs led the way on returning to the office. Now it says it will also require all employees to put masks on and prove they've been vaccinated. So we'll talk about the banking industry. We'll also talk about this new record high that we saw on U.S. stocks. A bit of a faltering market picture in Europe today, but the focus is firmly on Jackson Hole this week. This is Bloomberg.
never sleep. So stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back. This is what the markets are doing. So we're seeing a little bit of movement actually across the board after the U.S. stocks yesterday hit another record high. Now today they seem a little bit steady, rebounding, and Chinese technology stocks are stalling somewhat. Markets also settling into some kind of holding pattern ahead of the Federal Reserve Jackson Hole Policy Symposium later this week, and it's all about Jackson Hole. We'll have full coverage throughout the week. Now Goldman Sachs is imposing a mask mandate on U.S. employees from today. Staff that haven't had the vaccine by September 7th will have to work from home. Wall Street reaches out to Beijing to revive talks to open its financial system. ARC's Kathy Wood says she's bullish on the longer-term outlook for the world's second-largest economy. And Angela Merkel's bloc trails the Social Democrats in a poll for the first time in 15 years. A key Merkel ally told Bloomberg that the conservative group will actually undershoot its election goal in next month's vote. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition this Wednesday, the 25th of August. So 2 months after Goldman Sachs led Wall Street's return to the office, it's taking pages from the pandemic playbooks of more cautious rivals. The bank will now require employees to put on masks and prove that they've been vaccinated. For more, we're joined by Bloomberg's Elisa Martinuzzi. Elisa, great to have you, and great to have you actually in person in the studio. So what exactly are the specifics of the latest change from Goldman Sachs?
But what you're seeing is, all the big US banks are requiring either employees wear masks again, or that they'll be vaccinated, or proof that they're vaccinated, or both. As of course, the Delta variant makes that return to office that they had been hoping would go pretty much back to normal with September, gets delayed again.
And so how does it compare with other banks?
Well, I think what you're seeing is that the caution is pretty similar now right across the space. Of course, it's perhaps made it a little bit easier now with the FDA having given full approval to the Pfizer vaccine to mandate vaccinations for staff to be able to come back into the office. And, clearly, companies, even the ones that have been most vocal about the benefits of being back into the office, having to readjust their expectations.
So how is the office culture actually going to change because of it?
Well, I guess what it was going to be interesting is to see, how the effect of the prolonged remote work on individuals' desire to go back into the office, and also how employers adjust to that longer term. Of course, the big banks have all been very keen on getting staff back in, championing the benefits of in-person meetings to boost creativity and collaboration. But there are other reasons why the financial industry in particular is keen to get people back in. They're big lenders to real estate, to commercial real estate. And of course, the Wall Street banks conduct a lot of activities that are heavily regulated, where it's a lot easier if everybody's working from the same space.
Lisa, if people, for the vaccine mandate, is it going to backfire? I don't know whether you've heard of anything. Is it actually pushing employees to go and get vaccinated? Or, could we see lawsuits because of it?
I think it's early days, but clearly with the full approval by the FDA, it's going to make it easier for employers, and we're starting to see that in other industries as well, moving in the same direction, be feeling more comfortable at mandating proof of vaccination to return into the office, certainly.
Yeah, and we heard actually from President Biden saying now it's up to the corporates to make sure that their staff are vaccinated.
Indeed.
Elisa Martinuzzi, who heads up our investigations team. So if you have any scoop for her, email her, IB her, tweet her. I know she's working on some pretty exciting stuff. Now, as investors increasingly focus on inflation, BlackRock says they should look towards real estate and infrastructure assets. The world's biggest asset manager says it expects a higher inflation regime in the medium term. Now, a report from BlackRock highlights rising demand for real estate and says it's actually outperformed other asset classes during inflationary periods. Well, we're now joined by Jim Barry, Chief Investment Officer, Investment Officer of BlackRock Alternative Investors. Jim, great to have you on the program today. First of all, what's the bottom line with inflation? I know it's a great report, but how do you see inflation moving from here until maybe the second quarter of next year?
So look, I think in the short term, and it's nice to see you, Francine, I think in the short term, we're going to continue to see volatility. I think the restart has created friction and bottlenecks in supply chains, and we've seen the numbers increase fairly significantly in a very short space of time. But I do think the short term is driven by a lot of short-term dynamics, where we're focused on is more the medium and long term, and certainly our investment institute predicts inflation at around 3% in 5 years' time, and that we see driven by much more structural trends. Greater resilience in supply chains, driving cost. I think there's our bipolar dynamic, China versus US, again, driving cost into supply chains. So we're seeing more structural inflation at a more modest rate over the medium and long term.
Well, actually, for central banks to move, I know you talk about the new normal, which means that basically, because economic activity is restarting, we'll see inflation, but central banks will hold back a little longer.
Yeah, so look, I mean, led by the Fed, the central banks are giving themselves far more flexibility with respect to the monetary response with regard to inflationary pressures. Now, again, I distinguish that from the short term. I think the banks in the short term are taking the view that this is not structural inflation. This is driven by the restart on the back of vaccination and normal activity resuming. And I think that, they're sustaining that posture into next year till they see really where is kind of trend growth post rebound and restart. But certainly as we look again over the medium term, by adjusting targets for inflation, they've given themselves much greater flexibility to hold back and, as we say, create this new nominal, where we'll see real benefits from assets that have inflation exposure.
Jim, I know, and I love actually, the note that you guys wrote is also called Keeping Up with Inflation, which I feel is like what we try and do on Bloomberg every day. So what does it mean for some of the things that you're actually invested in? When you look at infrastructure, when you look at real estate, what does that concretely mean for that and investors?
So look, I think real assets are exposed to the real economy on a day-to-day basis. And what we see in this asset class is both direct and indirect exposure to inflationary dynamics. We see it in contract terms. We see it in pricing. And then you also see these assets, particularly in real estate, benefit from higher replacement costs, which again drives more value into the incumbent asset class. The other final point I'd say is that as investors in real assets, we're very focused on trying to keep our costs fixed. So in other words, in real estate, single, double, and triple net leaseback contracts, so the costs are burden is placed on the tenant. In our infrastructure assets, where we lock out the interest rate costs, we lock out operation and maintenance costs as much as possible. So really, what you tend to do is get this real positive cash flow benefit from the inflationary adjustment on the revenue line.
I know you also, point to higher commodity prices actually contributing to a higher replacement costs. What does that mean further down the line?
Well, look, I think that, you'll get the higher commodity prices in a more higher growth context. And I think that, that in turn drives, as we've seen even the short-term pressures, higher construction costs, which means that replacement costs for assets is higher. And that always will drive value into the existing assets. And in particular, in more supply-constrained markets, you'll see that to an even greater effect. And that's very much a dynamic that plays out in real estate right across the board.
Jim, thanks so much. Jim Barry there, Chief Investment Officer of BlackRock Alternative Investors, joining us this morning. Now, coming up, new rules from the SEC. The regulator announces new requirements for Chinese companies listed in the U.S. We get the take of ARC's Kathy Wood on that next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now to a Bloomberg scoop this morning, and a contingent of Wall Street veterans is seeking to reopen talks with high-level Chinese officials. Business leaders are looking to work outside of the Biden administration's official channels for greater access to the world's second-largest economy. Now, it comes as concerns swell about investing in China. But Kathy Wood says she's more optimistic than pessimistic in the long run.
I'm not pessimistic about China longer run because I think, they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in, but I don't think the government wants to stop growth and progress at all.
Well, alongside Kathy Wood, we've also heard from U.S. regulators overnight. The SEC is requiring the more than 250 Chinese companies trading in the U.S. to better inform investors about political and regulatory risks. Speaking exclusively to Bloomberg, the SEC chair, Gary Gensler, said the new rules will come into effect early next year. Well, for more on all of this, we're joined by Jonas Bergman in Hong Kong. Jonas, good morning to you. So what more can you actually tell us about this scoop on revived Wall Street talks with Chinese officials?
Well, certainly it's an interesting development after a long time of increased volatility. Basically, what we're seeing is a group of executives from high-level finance firms, which has in the past included Blackstone, Goldman Sachs, and was formed during the height of the trade dispute, is planning to meet again with Beijing officials to ensure access to China. A series of meetings are planned before the end of the year, and in fact, it's one of the executives is in Beijing right now. It comes as China and the U.S. are grappling with a series of standoff issues such as market access, data security, and international stock listings. A recent crackdown by China on a number of its own companies has also burned international investors. So, and at the same time, China is opening its financial markets more fully to Wall Street giants, counting on them to provide fresh investments, foster a more competitive local investment banking landscape. And they have poured billions of dollars into China. So there's a lot of stake ahead of these meetings.
Jonas, it's a pretty timely scoop also with the U.S. SEC chair commenting on Chinese firms in the U.S. overnight as well. So what's he been saying?
That's right. Gary Gensler issued another broadside overnight, again warning firms they will be kicked out unless they provide more transparency. Gensler said that investors need a full and fair disclosure, and that the agency was looking especially at regulatory risks and various political risks for Chinese companies. He has already halted Chinese IPOs in New York, a vital source of funding for Chinese firms. And as you mentioned before, there are now 281 Chinese companies listed in the U.S. and as well also more than 100 in Hong Kong, where access to financial data is also an issue.
So how will both of these actually impact Chinese firms going forward?
Well, I think Gensler's comment certainly ratchets things up a bit, but we're dealing with a 3-year deadline here. So there is still time to work things out. There is also signs of a more conciliatory tone from China, which is has long blocked U.S. regulated full access to accounting books at big Chinese firms. The State Council, China's top government body, on Monday issued guidelines saying it would boost cross-border accounting cooperation, while at the same time safeguarding its information security. The nation's security regulator also last week said that we'd work on enhancing conditions for cooperation with the U.S. on company audits during the second half of the year. So I think there's still a lot of developments to come there.
Great. Thank you so much for joining us, Jonas Bergman there from Bloomberg. Now, coming up, President Biden resists international pressure to delay leaving Afghanistan. We'll discuss the latest and, of course, dig into the nation's economy next. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Aqua here in London. Now, the U.S. Vice President Kamala Harris is speaking in Vietnam as part of her tour of Southeast Asian nations. She says that there are no conditions on the U.S. donation of 6 million vaccine doses to the country. China is also likely to be a large part of her speaking agenda as she continues her tour. Also, President Biden is resisting mounting pressure to keep U.S. and Afghanistan past his deadline. But he has ordered his national security team to come up with a contingency plan if a delay is needed. Well, joining us now is our Simone Foxman, who's been covering this story from the very beginning. Simone, there's international and there's domestic pressure for Biden to push the deadline back. Is he resisting because he's worried about payback from the Taliban?
You know, it's not just the Taliban here that he's worried about, but he did say he was worried about a serious deterioration in the situation. It's also the potential threat of a terrorist attack, particularly from the part of ISIS that operates in the region called ISIS-K, on troops, on people who are still standing in masses outside of the airport. That's just a very threatening situation. But as you said, the Taliban is also saying this is a red line in the sand for us. U.S. troops have to be out by August 31st. We're not going to permit them to stay longer, no matter what the G7 says. G7 not getting Biden to change his tune. And we've even seen 2 U.S. lawmakers from both the Republican and Democratic parties. They flew on a secret trip into Kabul to observe the airport, and they came back and they called for an extension of that deadline too. But as yet, the Biden administration is very firm in rediscussing this deadline, and also they are starting to tout the events of the past 10 days as what's essentially a historic evacuation mission at very high tempo. They're saying, look, this is the second largest evacuation in American history, more than 70,000 people out in the last 10 days, and we should be proud of this despite some of those early chaotic images that we saw.
So what are we likely to see actually as the deadline approaches?
Well, we would eventually see not only evacuation flights stopping, and officials in France and Germany have started to say that they could end, at least their evacuation missions could end as soon as early this week, but eventually, U.S. troops slowly departing and the Taliban taking more control of the airport area. There is a lot of discussion about, the potential for civilian flights to continue getting out those at-risk people, any, Western diplomats and the like left behind. That is what Angela Merkel said. She's very focused on the plan beyond August 31st, where there is no U.S. troops. But that plan, that future are still very much uncertain at the moment, Francine.
Thank you so much. Bloomberg's Simone Foxman there with the very latest on Afghanistan. Now let's get more on the future of Afghanistan's economy. While the country's annual GDP is only some $20 billion, the nation is sitting on vast quantities of valuable minerals such as lithium, a key ingredient in everything from smartphones to EVs. Now, U.S. officials estimate that Afghanistan has $1 trillion unexplored deposits. The Afghan government says they're worth 3 times as much.
Because of the geology of Afghanistan, some of these deposits are remarkably accessible, especially the rare earth elements.
Afghanistan is not going to be a very pleasant environment to be in. It's going to be very corrupt.
But that's just the geological point of this. Afghanistan is very underdeveloped, not only because of with respect to mining, but also, as you mentioned, the infrastructure.
So you have these vast resources sitting there. So it's going to turn into a curse more than a blessing for countries like Afghanistan, where you have enormous amounts of corruption going to happen in the future.
Well, joining us now is our chief Asia economics correspondent, Enda Kern, who has done some fantastic reporting and editing on the story. So, Enda, good morning. What kind of Afghan economy is likely to emerge after the Taliban takeover?
Well, Francine, we know that the economy right now is in free fall by all accounts. The ATMs are running out of money. The pharmacies are running out of drugs. Prices for core staples are going through the roof. We know that the currency is under pressure. And of course now their access to hard currency has been cut off. Both the IMF and World Bank have pulled back from their funding programs, and the reserves in New York are frozen as well. So economists are asking what does happen next in terms of Afghanistan's economic development and the reserves that they have, the mineral reserves that they have. And it all comes back to what kind of political system emerges out of Kabul, whether or not they adhere to international standards on human rights, and of course, above all, on women's rights, and they build on some of the progress that was made on female literacy over the years. And that's what economists are saying now, is the difference between the economy going into a spiral or not will depend on what steps the Taliban takes next.
Yes, and what are the economic attractions for China and Afghanistan right now? I mean, is it all about the rare earths, Enda?
Yeah, well, there is a security dimension, obviously, Francine, but there's no doubt that Afghanistan has this pile of mineral deposits that you mentioned, at least $1 trillion worth there. It's got the world's biggest holdings of lithium reserves, for example. And remember, we are in a very different world economy now than when the Taliban last ran Afghanistan. We're in a world of electronic vehicles, smartphones. There's a premium on lithium. Several analysts make the point, in fact, that there will be a push on trying to get that lithium out of Afghanistan. Now, of course, China will have an interest. There was an opinion article in the New York Times over the weekend by a retired PLA Army colonel making a direct link between China and those mineral deposits. The state media have said the same. But, you know, Francine, as I say, it comes back to what kind of political system emerges out of Kabul in terms of whether or not they can line up international partners to get those minerals out of the ground.
So what will the Taliban also need to secure foreign cash, Enda?
Well, look, if you look at it right now, we had that news overnight. The World Bank is the latest to step back from their funding. By all accounts, the US doesn't certainly seem to be in a hurry to step away from freezing those assets or cutting off funding. So that puts Afghanistan in the box of being something like a pariah state. And of course, when you consider the background to the Taliban and the oppressive regime that they follow, you'd have to say international partners won't be lining up. So it all comes down to whether or not the Taliban does defy expectations and does kind of step forward as a government that does adhere to human rights and basic women's rights, of course. That will be critical to getting those international alliances and recognition going. And if it does that, then, Francine, it might start to source some foreign aid, some foreign technical know-how, and some foreign partnerships, and that may allow the economy to develop. And if it doesn't, it's going to fall into a spiral of poverty, and that's what all the economists are warning.
Enda, thank you so much. Enda Curran there, of course, very invested in some of these reporting stories on Afghanistan. Now, we'll also look at the markets. Yesterday, we had another record high when it came to U.S. stocks. Now, if you look at European stocks, now it's very clear that Chinese technology shares actually stalled, markets settling into a little bit more of a holding pattern ahead of the Fed's Jackson Hole policy symposium a little bit later this week. Bloomberg surveillance continues in the next hour. Matt Miller joins us out of Berlin. Lisa Abramovitz will be in New York for us as well. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
be the skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The number one condition that we're insisting upon is safe passage beyond the 31st, so beyond this initial phase for those who want to leave Afghanistan.
We want them to evacuate all foreign nationals by the 31st of August. And we are not in favor of allowing Afghans to leave.
We are currently on a pace to finish by August the 31st. The sooner we can finish, the better.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, August 25th. Our top stories today. Biden seeks a plan B. The president sticks to his Afghanistan withdrawal plan, but he's asking national security advisors for options. A warning from the SEC chief. He says the clock is ticking on possible delisting Chinese stocks. And Goldman Sachs turns cautious. It led Wall Street's return to the office. Now it tells staffers vaccines and masks are mandatory in the workplace. Well, good morning, everyone. I'm Francine Lacqua here in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Kaylee Lines is off today. Lisa, I was looking at the markets. I mean, I think we're like on a streak. It's like the 50th day in a row that we saw fresh record highs in the U.S., which is crazy. Well, but when you look at Europe, a little bit of a breather.
And the amazing thing is, frankly, that people are yawning, right? People think that it's a boring market, even though we get record high after record high at a record pace nearly. Meanwhile, we're seeing a bit of a muted reaction over in Europe. Yes, it's gain. There are gains, and that's really coming from what we have seen over in Asia. However, muted, not a lot of drama. You can see the Shenzhen up about 0.2%. You can see the Nikkei down just a touch, but really no drama across the board in the FX markets. It really is dollar strength today. A little bit, again, no drama. I don't want to make too much of these moves, but you are seeing across the board a bleed through of that stronger greenback, whether it's versus the yuan in China or the yen in Japan. Meanwhile, you could see that the Shenzhen index up about 0.2%. You saw a real breather after that huge rebound that we saw in Chinese technology stocks. People saying, well, you know, the Chinese authorities are still going to crack down when it comes to removing some of the dominance, particularly with respect to some of the data that they have. If you take a look over in the United States, we're gearing up for potentially more gains, but again, no drama, not a lot going on this Wednesday ahead of the Jackson Hole Symposium, which again is virtual. 10-year yields just ticking down a touch, but really seeing them near the highest levels for a while. And going back though to what, Matt?
129. Wow.
Yeah, I mean, it's, yeah, ooh. I mean, if you remember back in June, it was, 136. So, I mean, we've come a long way down, a long way, right? There is a question of what could send yields higher. Let's say the Fed does talk about tapering sooner on Friday when Chair Powell takes a stand. Then what? Do yields go up or do yields go down? We'll discuss. And again, the dollar strength, really. The crude, though, and Matt, this is interesting. Crude, first down day in 2 days, yesterday, marked the end of the biggest two-day gain for oil going back to November. Matt?
Yeah, but still a relatively high price. Speaking of yawns, I have a great board for you in just a minute. Take a look at the map here. You can get this on your Bloomberg. Just type WMGO. You can see we have some gains, but they're very slight and not in the boot of Italy, but the Iberian Peninsula is up, the UK is up, and then across the core of Europe, we see gains so slight that they're just gray, not even green. In terms of the yawn that I had prepared, even before Lisa mentioned it, I just wanted to point out, it seems like nothing changes. Okay, we have a little bit of a move to the upside in the stock 600. That's obvious because stocks only go up, but you can see that, for example, rates, the 10-year German Bund, I feel like it's been at negative 46 since I was in high school. You have the euro pound. I just put that up because I hope to come to London soon and I want to do some shopping. It hasn't moved at all either. 86 cents is the price there. The only thing I thought was mildly interesting was Brent, and that's because of the price that I felt was a little bit higher, right? We're over $70 a barrel again on Brent, but even that is down 34 cents a barrel. So it does seem in terms of price action, there's not a ton going on. We do have, though, a ton of news. Obviously, Francine, geopolitical out of Washington, geopolitical tied to Wall Street out of China. There's a lot of virus news like there is every day, and there's more IPO or going public news that we'll talk about throughout the program.
Yeah, I like the fact that you did a good roundup of crude oil, but let me remind you, Matt, if you're coming to London, you're just buying drinks, you're not driving, so that would be a good incentive for you to come over here. At the same time, you know, the holding pattern is also because maybe volumes are a little bit lower because most people certainly in Europe are at the beach right now. A little bit of breaking news, the Senate tax is planning to boost some of the penalties on companies sending profit abroad. Matt, I know you have some thoughts on this because we've been talking about it in the last couple of weeks, but it seems to be coming at the forefront.
Yeah, well, I just think it's interesting to watch this tax policy unfurl. In fact, if you look at the S&P strategists, we were looking yesterday at their targets because Wells Fargo, I think, upped their target to 48.25. We also have a table there where you can see what earnings projections are and whether or not those strategists expect tax increases or tax changes in the next year. Most of them say they do expect changes. And remember when I think David Kostin was on with Lisa a few weeks back, maybe now it's a little over a month ago, from Goldman Sachs, and he said it's rates and tax policy that really matter for equities. So tax policy is one to watch.
Yeah, and Matt, if we see some of these steeper penalties, I think the way that investors are also reading it is that it's probably the clearest picture yet of some of the higher rates that they will pay under Democrats.
Yeah, of course, the question is how much agreement can there possibly be on Democrats anyway? Go ahead, Fred.
No, you're right. You're absolutely right. I mean, we'll spend a lot of time looking at how Nancy Pelosi can kind of, you know, herd all the cats to make sure that they vote one way. Now, a look at what else is coming up ahead today. 8:30 a.m. New York time, we'll get the latest U.S. durable goods data. 10:30 a.m., the EIA releases its latest crude oil inventory report. The U.K. is also holding its 3-week review of COVID travel restrictions today, and President Joe Biden meets with industry leaders at the White House to discuss strategies for improving cybersecurity. Now, President Biden is sticking to his plan to remove all U.S. troops from Afghanistan by August 31st, but he's ordered his national security team to also come up with contingency plans if he decides a delay is necessary.
We are currently on a pace to finish by August the 31st. The sooner we can finish, the better. Each day of operations brings added risk to our troops. But the completion by August 31st depends upon the Taliban continuing to cooperate and allow access to the airport for those who we're transporting out and no disruptions to our operations.
Let's get straight to Anne-Marie Hordern, Bloomberg Washington correspondent, joining us from our D.C. bureau. Anne-Marie, as soon as you talk about a plan B, does that plan B become more likely?
Yeah, he mentioned that the fact that he asked the Pentagon and the State Department to draw up these contingency plans, but he remained pretty firm, Francine, that there's not going to be a need for plan B. It's plan A, and that is to get everyone out by August 31st. What's so interesting about this is, of course, that means civilian flights, getting the Americans, getting the Afghan allies out way before August 31st, basically the next few days, because then you have to wind down the military operation there, which is just short of 6,000 American troops. He did come under a lot of pressure at the G7, but he doubled down and thinks they can get it done by the 31st.
Meanwhile, Anne-Marie, you have the Democrats actually coming to some consensus to pass the $3.5 trillion budget resolution yesterday. Can we get a sense of what this means? Because honestly, passing a resolution is very different than coming up with the details, agreeing upon them, and then pushing them through.
Yeah, and I think we're seeing some of the fruits of that this morning when you have the Senate Finance Committee already putting out potentially what legislation could look like for the tax increases. You make a very good point, Lisa. I think people were very excited thinking that bills were passed yesterday, but the only thing that was passed was procedural rules, which basically means now the floor is open, committees can start gathering, they can start taking up the details of what goes in the $3.5 trillion, and it just parks that bipartisan infrastructure agreement for the House till September 27th. This is what we talked about yesterday. We thought maybe it'd be October, but this is what Speaker Pelosi how she was able to get the moderates on board, making sure there's a firm date in the future that they would vote on bipartisan infrastructure. She has September 27th saying she'll take it up by then. That's her commitment. And for me, this just says it's a little bit of a gamble because the progressives say they'll tank that if they don't get reconciliation. So what? Congress has about a month to get it all done.
All right, AMH, thanks very much. Anne-Marie Horton there covering everything for us out of Washington. Now, the SEC has a warning for Chinese companies: submit to more scrutiny soon or get kicked out of U.S. exchanges. Chairman Gary Gensler, that would be a pretty cool name. He's pledging a 3-year deadline for the firms to permit inspections of their financial audits. ARC's Kathy Wood spoke out on the requirements.
With investor feedback, that the SEC is saying, wait a minute, this is a more mature economy. Transparency is becoming more important now. The growth is not going to cover all sins, right? It isn't as explosive anymore. And I actually think it's a very good move. I don't know if China is going to comply, which means within, I think it's a 3-year time frame,
right.
The companies here would have to delist. So that is a risk, and we are thinking about that as well.
Jonas Bergman is Bloomberg Greater China finance editor. He joins us now to give us a little bit of detail here. Jonas, what kind of reaction are we seeing from Chinese firms that list, obviously through holding shells that are loosely connected in the Cayman Islands to the U.S.?
Well, I think most importantly is what kind of reaction are we seeing from Chinese officials? And we have seen signs over the past couple of days, last week, that they are becoming more conciliatory. And this is an issue that's dogged China-U.S. relations for years. The State Council, China's top government body, on Monday issued guidelines saying it would boost cross-border accounting cooperation, while also, of course, emphasizing that it would safeguard its information security. The nation's security regulators also said last week that would work on enhancing conditions for cooperation with the U.S. on company audits during the second half of this year. So there's clearly things moving in China as well.
Jonas, thank you so much. Joseph Bergman there with the very latest on the China-U.S. firms. Now, Goldman Sachs reversing its back to the office stance and said all staff must be vaccinated to enter its U.S. offices. Masks will also be required starting on Wednesday, regardless of vaccination status. Let's get more on this with Bloomberg's Ritika Gupta. Ritika, Goldman Sachs is just the latest one to have these kind of impositions on staff.
Yeah, Francine, this is a big U-turn here for Goldman Sachs. Just 2 months ago, they were really leading Wall Street in the return to the office. And I remember this event because there was reports of live music, food trucks outside. There was a lot of excitement about this. So a big U-turn here. And now they've put in 2 main changes here. Now, this, of course, does relate to their U.S. offices, I would add. The first one is masks. So they previously rescinded the need for masks. And now employees will have to wear them in the offices regardless, in common places, regardless of your vaccination status. In some offices, they're even going as far as to say that you have to wear them at your desk. Now, the second one is, of course, about vaccinations here. Now, if by September 7th, you don't have your jabs, you can't be working at the office and you have to work from home. And this, of course, comes at an interesting time when the FDA just gave that full approval to the vaccine. So it kind of paves the way to make it more legally enforceable for companies to mandate it.
All right, so Goldman, often thought of as king of the hill on Wall Street. How are other banks responding?
Yeah, Matt, as I mentioned, Goldman Sachs really was the most aggressive in this push in getting them back to work, but also just this return of sense of normality. So it's likely that other banks perhaps would rethink their strategies here. Other banks had a more cautious note. So Goldman Sachs kind of joining their ranks now. So Morgan Stanley hadn't set a date for return to the office. We had Bank of America, Wells Fargo, Citigroup. They were eyeing post-Labor Day to bring all their workers back. But this idea now that post-Labor Day, things are going to go back to normal? Well, it doesn't seem so likely. In terms of the vaccination policy, the likes of JP Morgan and Citigroup have a similar policy here to Goldman Sachs. But I just think of the broader ramifications here. So if you have this vaccine mandate and if it does deter workers from coming back in, what does that mean for local businesses, coffee shops, restaurants that rely on these workers coming back in order to do business with them?
Ulrike, thank you so much, and also fantastic reporting from our Zurich team, because we just found out that Credit Suisse was also delaying a return to the office for the unvaccinated and are now asking actually all of their employees to get double jabbed. Coming up this hour, Ian Hartnett, Absolute Strategy Research Chief Investment Strategist. We'll talk yields. We'll, of course, talk about Jackson Hole and the markets. This is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I'm not pessimistic about China longer run because I think, they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in, but I don't think the government wants to stop growth and progress at all.
Reconfirming her confidence in China, that's ARK Invest Chief Executive Officer Cathie Wood speaking with Bloomberg's Carol Masser yesterday afternoon. There is a question going forward about China, about the regulatory influence, and about the willingness of the People's Bank of China to support that economy with further accommodation. Damian Sassower, Bloomberg Intelligence Chief Emerging Markets Credit Strategist, joining us now. Damian, I want to start there. It seems like there was a shift in tone this week as people expected the PBOC to actually come out with more support. What kind of sense did you get that there was actually some meat behind that?
I think really, I've heard a lot, over the last 24 hours, I've heard a lot about Cayman SPCs, Bermuda SACs, variable interest entities. At the end of the day, why would anyone set up an offshore structure? It's about two things and two things alone. It's about control, maintaining control, but doing so with anonymity. And I think really fundamentally, we've heard Cathie Wood and everybody talk about the data and what's the data they need to disclose. Well, the data is holdings, it's ownership. And, I think that's the big black hole in China. Who owns what and where does it come from? And so I think that more than anything is what, people are going to be focused on, myself included, because I just don't see that getting resolved in the near term, Lisa.
Well, Damien, what about, there's, we've heard it numerous times from the National People's Congress that there's also about redistribution of wealth. This is a social regime that basically doesn't want some of their companies to earn too much. How does that impact how you look at, investors getting into China?
Well, good luck, because that's an issue that we here in the U.S. have also encountered. I mean, that's all about real wages. And look, wealth distribution in China is definitely an issue. You see the way total social financing data that came out last week in China really was focused more on supplying credit to small and medium enterprises as opposed to the big tech, the big corporates, et cetera. But look, for me in China, look, this is about liquidation of the reflation trade. I mean, if you just look at the market right now, we were going into 2021 thinking, as the lockdown subsided, as growth picked up, this was going to be all about reflation, EM, commodities, FX. Well, guess what? That's all been liquidated. And what that's done, Francine, is it's created some huge discounts, specifically in emerging markets where I live and breathe. I mean, if you look at EM equities, 40% discount, valuation discount to the S&P. If you look at EM yields, emerging market local bond yields, they've been rising in the face of a falling U.S. Treasury 10-year. That doesn't really happen, and those are creating real outliers for me and real opportunities for investors, in my opinion.
For me, Damien, the real question is China still investable? The SEC thing about disclosure, I feel like is a sideshow, because if you actually bother to read the prospectus, which probably no one does, they say pretty clearly this could all be worthless if the PRC decides they don't want it to happen. So even if Gary Gensler gets them to write it in crayon, in block letters on one page, investors are still going to want to know, should I buy the stock or not?
Well, Matt, look, I'm an emerging markets guy. Prior lifetime, I ran over $1 billion in frontier assets and frontier equities across Pan-Africa and other emerging market domiciles. And look, China is no more uninvestable than they are, right? You just have to know the risks going in. You need to know the political risks, the regulatory risks, rule of law, et cetera. And look, if you're comfortable with the fact that China can swoop in, Beijing can swoop in and rewrite the script on you, well, then that's a risk you have to take if you're an emerging market equity or fixed income investor. And look, for me, that's nothing new. That comes hand in hand with investing abroad, reaching into your pockets, taking your euros, your dollars, your safe assets, and investing them in riskier asset classes.
Damien, thanks so much. Smart conversations with Damien Sassow of Bloomberg Intelligence. I urge everyone, actually, he has 3 pieces of research out on, the CDS, the spread correlations in China, also something on technicals, and the latest one on creditors. I urge everyone to go and read them. Coming up, be sure to stay with Bloomberg for our coverage of the Jackson Hole Economic Symposium. That starts this Friday. And this is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
by Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Now let's get straight to our Bloomberg First Word News. And the effectiveness of coronavirus vaccines among frontline workers fell as the Delta variant became dominant. Now that's according to the CDC. The agency says vaccine effectiveness declined from 91% to 66%. Still, researchers urge caution when it comes to the findings. They say the vaccines are still working. And investment firm TPG is working with JP Morgan Chase and Goldman Sachs on plans for an IPO. Bloomberg has learned that the firm has not made any final decision on a public offering. TPG could be valued at about $10 billion. Meanwhile, eyewear retailer Warby Parker has filed to go public in a direct listing. The company says revenue has jumped 53% this year. And looking for a milkshake at a McDonald's in the UK? Well, you're out of luck. The fast food giant has run out of shakes in England, Scotland, and Wales. It's the latest restaurant chain hit by a labor shortage that's hurt key industries from trucking to food processing. Matt, I find the story so crazy because we've also seen a chicken shortage at Nando's in the UK.
Well, that's, I think, more disturbing because Nando's is delicious. But if I were looking for a milkshake, I would go probably anywhere else than McDonald's.
All right, we'll go back to the markets and maybe talk about supply chains. This is Bloomberg.
For a milkshake, I would go probably
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。 予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Katie Lyons is off today. Matt, I think you put it beautifully. If you look at the markets, okay, they're still on a tear. They're kind of, you know, every day in the U.S. stocks, it seems like we're seeing a fresh record high. But actually, there's not huge news supporting the markets. There's news elsewhere.
Yeah, there is. And in fact, if you look at some moves in the bond market, you could see that this doesn't make a lot of sense. I guess that's part of Michael Burry's medium-sized short. Could be a gigantic short, and I really look forward to seeing how that works out.
Yeah, I look forward to seeing how that works out as well. Lisa, you had a great piece actually on the Fed yesterday, also in Bloomberg Opinion. How is Jackson Hole playing on the markets?
True. Yeah, well, honestly, I don't know how much Jackson Hole is playing on the markets. Most people expect it to be a non-event. Whether it is, and frankly, what the implications of the Fed tapering sooner than later is unclear. I mean, to me, that's sort of the strangest aspect of this whole thing, is that we're getting basically a Fed with unclear policies, with an unclear policy response in markets. Meanwhile, what we're seeing in markets, why not go higher if you could go higher? Because why not get another record high? Stocks over in Europe, no drama, up 0.1%. The S&P futures indicated for another up day after what, the 50th up record high of the year. Then you have 10-year yields inching down, but really near some of the highest levels in a couple of weeks, 1.29%, and a bit of dollar strength. But again, I mean, really, I want to emphasize the no drama that we are seeing. Meanwhile, if we take a look at some of the pre-movers that we see ahead of the opening bell in the United States, Nordstrom down. This to me is fascinating, down more than 3%. Sounds like they did something terrible, right? They posted a top and bottom line second quarter earnings beat, and they tweaked their margin guidance higher. But evidently, investors aren't impressed. It just shows you how high the bar is. Meanwhile, Riot Blockchain filed a registration statement for the potential secondary offering of up to 11.8 million shares, a little bit lower after a pretty big run that we saw in AMC Entertainment, continuing its roll higher after yesterday's 20% pop, the biggest jump in a month. Looks like meme stocks are back, Matt. What are you watching?
I guess, I wonder what movies are out in the U.S. right? I guess Free Guy has been out for a couple weeks now, and I have yet to get that here in Germany, but I can't wait to see it. I am watching, well, for one thing, I will tag on to Francine's point about your opinion piece, Lisa. I think it's brilliant, talking about how the Fed's policy is hindering its policy objectives. I love it when Lisa writes an opinion piece. You can find that OPIN-GO on the Bloomberg terminal. Another thing that maybe Lisa will find interesting is that when you look at the bond picture, and specifically the spreads between investment grade and high yield debt and U.S. Treasuries, it's telling you a different story than you're seeing in the markets. I have a brilliant chart here that I kind of stole from Dave Wilson, who is our senior stocks editor at Bloomberg News, that shows the difference in or the story that those two markets are telling. And I want to bring in Ian Harnett right now. He is chief executive, or chief investment strategist, I should say, at Absolute Strategy Research, to give us his take. Ian, why do we see, you know, new high after new high? I think Francine said 50 in a row, or 50 altogether so far this year, and yet you see the smart money telling us something different.
Well, you know, I think the question is whether it's smart money. One of the messages that we've been giving to people is that these risk assets have actually been continuing to perform pretty well throughout this year, even though there's been this focus on these lower bond yields as some of the PMI numbers, some of the activity surprises have started to moderate. Plentiful liquidity. You talked about that in terms of meme stocks. You know, we're seeing corporates where earnings growth over the last 6 months globally is running at about 86%. They've got money on hand. So, you know, if you've got this weight of money that is going both into the bond market, into the equity market, and providing that lift, I think, Matt, that's really driving these things. Yeah, 20% of global markets have made new highs in the last week.
Ian, I got to tell you, Matt mentioned my opinion piece, and basically it was talking about the theme of this year's Jackson Hole Conference, which has to do with inequality and macroprudential policy in this kind of era. And one of the most amazing aspects of the response, and there was a lot of it, was how much disagreement there was around the influence that Fed stimulus has had on market valuations. Some people saying it really has not propped up asset values all that much in the first place. From your perspective, Ian, how do you understand the Fed's interference in markets in terms of how much they've propped up prices when you look at what a withdrawal of some of the stimulus might do?
Well, I think when we saw that when quantitative tightening came through and we saw the economic growth numbers decelerate and we saw some of these bond yields pick up again. You know, I think the bottom line is that there has been a support undoubtedly from quantitative easing. You know, if we look at the equilibrium models of bond yields, those bond yields are still talking about numbers around 3% or higher, and yet we're down at 1.3%. So undoubtedly, you know, the involvement in the Fed has distorted these markets, and, you know, the involvement of the change of policy focus. So for us, that shift from inflation to inclusion that, interestingly, we're also seeing in China with the common prosperity theme, you know, this is a big theme on a global basis.